Hello students, welcome back to the channel. So today we will learn about the straight line method of the depreciation. So it's a continuation of the last class where we studied and learned about the theoretical part of the depreciation chapter. So today we will start with the one sum of straight line method way of depreciation. So let's go with the illustration. So it's MS Shaw and brother purchased a plant of rupees 5 lakhs on 1st of April 2017 and spent rupees 50,000 for its installation. And at the end of the 10th year, we are seeing on the sum that there is a salvage value of 10,000, which is nothing but the residual value of 10,000. So what the sum is asking us to do, draw a plant account and the depreciation account for the first 3 years. So though the entire useful life of the asset is for 10 years, but we have been asked only to prepare it for the first 3 years. So what are we going to do? And this is to be done in using the straight line method of depreciation. And yes, the books closes on 31st of each year. So if you see, the machinery was purchased on 1st of April and the accounting year closes on 31st of March. So this entire asset has been used for the entire year. There has been no any partial treatment that needs to be done. So this asset has been purchased in the very first day of the year and it has been used throughout the year. And if we start with the sum, so first of all we will go with this plant and accounting and the depreciation account, but first of all let's look into the working notes of this sum. So what this working note is all about, so we need to prepare a working note to understand or to calculate what will be the amount of depreciation, what is the total amount of capitalized amount of the asset, what is the total net value of the asset, and what is the depreciation amount, what is the rate of depreciation, and all those details. So we are doing this working note over here. So if you look into the costs and amount column, so the first thing is purchase cost, which is of 5 lakhs, and then we are adding with the installation cost of 50,000. So see, this machinery has been purchased and then it's getting installed. So this means this installation is done before the asset is put to use. So any cost that has been incurred before the asset is being put to use, that also needs to be added to the value of the asset, or in simple terms, in the day-to-day real life scenario, we call it as capitalization. So the installation cost also needs to be capitalized. So what is the total amount of the asset in that case? It is 5,50,000. And then we are deducting the amount of the salvage amount, which is the residual amount of 10,000, and we are getting the net value of 5,40,000. So this is nothing but the net value of the asset. And then if you look into the details, so the asset will be used for 10 years. The lifespan of the asset is for 10 years. So the depreciation amount will be 5,40,000 divided by 10. So that means we are going to distribute the entire depreciation amount throughout its life. So the depreciation amount becomes 54,000 for individual year. So if you go to the plant account, if you see, go to the very debit side of the account. Debit side is nothing but the left hand side. So we have purchased the asset with 5 lakhs and the installation for 50,000. So to bank account 5 lakhs and to installation charges 50,000. Both have been done on the very first date of 2017. So that is the date bank account 5 lakhs and bank account 50,000 being updated, and total amount of 5,50,000 coming up as total. So now we are going to reduce the value of the asset by depreciation. Depreciation is nothing but the reduction of the balance of the asset. So we remembered in the very first class on the types of accounts that to reduce the value of the asset, we need to credit the asset account. So over here we are crediting the asset account by depreciation, and we are debiting the depreciation account. And why we are debiting the depreciation account? To increase the value of depreciation, to book the amount of the depreciation. That means, and also, if you remember, we discussed in the last class, depreciation is an expense, so depreciation is getting debited over here. So then if you look into the journal entry, the entry is depreciation account debit to plant account. So in the plant account, we are updating the entry as by depreciation account of 54,000 at the very last day of the year. So in 2018, by depreciation of 54,000 is being updated. So now we are getting the net value of the asset as balance CD of 4,96,000. Now the closing balance as on 31st of August 2018 will be the opening balance for 1st of April 2018. So this is where the amount of 4,96,000 is being transferred as the opening balance of the planned account as 4,96,000. So now if we go to the depreciations account, so the very first date that we can see is of 31st of April 31st of March 2018 to as to plant account, which is nothing but this transaction of this depreciation. By depreciation account 54,000, so in the depreciation account it will be to plant account 54,000. It's the same amount from here being transferred here. So now, since depreciation account is an expenditure account, over here what we are going to do is we are going to transfer this cost of this depreciation to the profit and loss account. So the amount will be transferred to the profit and loss account as the balancing number. So the entry will be to profit and loss account of 54,000. So this depreciation amount will be transferred to the profit and loss account, and we will see this depreciation transaction, how this depreciation amount looks into the profit and loss account while we will start studying about the final accounts. So as of now, we will only restrict ourselves to transfer this depreciation amount at the end of the year to the P&L balance, to the P&L account, that is profit and loss account. So we have transferred this amount of 54,000 to the P&L account as on the last date of the year, that is 31st of March 2018 of the financial year. Now in the next year, what has happened? We have again the depreciation for the entire year of 31st of March 2019 by depreciation account and the amount of 54,000. So now once this amount has been transferred, so the net residual balance at the balance CD is around 4,42,000. And if we again go to the P&L account, to plant account 54,000 and to profit and loss account 54,000. So this is the amount that we are again transferring it to the profit and loss account, and then we are doing with it the very last year, like the third year of accounting that has been asked in the sum. So the closing balance of 31st of March 2019 is going to be the opening balance of on 1st of April 2019 as 4,42,000 as to balance BD. And then again on 31st of March 2020, there we are charging the depreciation. So depreciation amount is coming up as 54,000. So once this amount is coming up in place, we are again getting the residual balance of 3,88,000, and then this 3,88,000 is being transferred on the next date, that is 1st of April 2020 as the opening balance of 3,88,000. We will stop the sum over here, means as the accounting on this sum, because we are only being asked to calculate and charge the depreciation for the first 3 years. So this is 2018 is the first year, 19 is the second year, and 20 depreciation is the third year, and we have just kept the balance as to balance BD on 3,88,000. Similarly, for the year 2020, as 31st of March 2020, we are again charging the depreciation over here as 54,000, and this amount is being transferred to the profit and loss account of 54,000 on this sum. So this is a very basic example of how the straight line method of depreciation is being done. There will be multiple add-ons could be happening in the sum, where new machinery is being purchased during the year, that is within the year, and also there might be some existing assets that is being sold off, and all those transactions will be there, all those kind of transactions, all those kind of and workings to be done. So we will learn those things in the upcoming videos. As of now, this is the very first session of the straight line method depreciation, so I am restricting myself only with this thing as of now, and we will come up with those kind of solutions, those kind of sums in the upcoming videos. Thank you so much. Have a nice day. And if you have any questions, do let me know on the comment section. Thank you.